What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy. Yo, Wolf, do we have you up here?
Think so.
Perfect. All right. Well, I know how all the technical problems have been going for both of us, so I expect what might be happening during the spaces. But I'm excited to get ready to go in with this FinTwit Friday. We'll give a couple minutes to get all of our speakers in here, but we'll get going in probably under 2 or 3 minutes.
Cool. I hope it tries to keep me up here. If it doesn't, then you know the drill.
All right, I just got all of those sent out to all of our speakers. I see we got Brad in here as well. Quickly, Gob, while we have you, can we start off with a little bit on how your week has been in the market so far? Or so far, I guess it is so far. We still got an hour left. Anything you're watching, anything
Yeah.
like that, top of mind?
Yeah, I'm pretty flat this week. I had a nice start off the beginning. It looks like, I guess if you're going back to Monday, that came in pretty nicely. Was up on Monday, up on Tuesday, and then just like crashed on, I think it was Wednesday, I guess. Maybe that's Tuesday. Yeah, it looks like I guess Tuesday was like kind of where the crash came in, and it just really took me down. I was down at the lows, like down 4 or 5% this week. That I had that fell in the morning of the Fed meeting, but then after that Fed meeting went up about 7 or 8%, and then unfortunately had another down day yesterday as we kind of returned back, and then today a pretty flat on the day, down about 0.08 right now. So basically exactly flat. So on the week, down 1.4% in my growth account. Obviously, pretty heavily influenced by crypto, which did not have a great week. Bitcoin is down. Ethereum, I think, is down as well. Ethereum's down about 3.2%. So my stocks actually weren't terrible this week. My stocks kept me in it because I'm down less than crypto's down on the week. So stocks are okay. I made three option trades that really counted this week. I did one on AMD that was really good. That's the one where I should have taken it. I was up like 70%, but I still got out with 45% gains as it started falling yesterday. I cut that, took the gains. I also had a pretty decent one on Walmart, but I kind of gave back those gains because I tried to scalp AMC on one of those days. So overall, not the best week, not the worst week. Still a very, very rough 5 weeks if you go back to really November 8th. I mean, just from November 8th to this point, it's a little horrible, to be honest. So if we could find this bottom, that would be nice for both, crypto, which hasn't really fallen that much, but as well as and just looking at opportunities. You heard some of them already in that last space that we did, but I like some of the ones that Danny pointed out, like CCI. I'm continuing to keep my eyes on like SL. That's coming down to its 50 average. That's the triple leveraged semiconductor one. Playboy's now down pretty far. I want to see if it can find any footing. I'm not going to trade anything that's in a downtrend or something like that unless I'm shorting it in that case. I might short Wayfair next week. We'll see. It had a 6.5% pop today, and it came back to above 200. So if it doesn't hold that 200 level on Monday, I'll probably buy puts on that. And yeah, I mean, that's like the overall start. But if we want to like chat more later, I can give some more names, like more towards like the middle.
Perfect. Yeah, we'll definitely come back for more of those names. I know my amazing co-host, which actually, let me give the co-host to you. Let me give the other one to Stock Talk. Um, I know you've been doing a lot more work in trading and kind of just been getting better and better every single week. So I am definitely happy and excited to hear a bunch of those names. With that, I'm going to throw it over to Brad for a similar type question, a little bit of an intro. How was your week in the market? Anything that really caught your eye at the start?
Yeah, pretty wild, pretty wild week. For those of you who know me, I usually go extremely slow adding cash to names and accumulating, and it was a little less slow this week on Wednesday and Thursday, amid the Fed announcement and everything that was pretty much in line with what I was expecting, and nothing super alarming. Don't think there's going to be a taper tantrum. Don't think we're going to have runaway inflation or anything like that. But won't go too far into it because I did a few hours ago. But yeah, I did most of my buying on. It was yesterday when I did most of my buying. Took cash position down from 14.3 to 13.7%, which is a big move for me. And I know I say that a lot and people will laugh because it doesn't sound like much, but pretty big move for me. Added to names like Air Wellness that I talked about a little bit, and Olo and Upstart, and a little bit of Teladoc and GoodRx and SoFi, all really small ads that I'm continuing to make as we get more turbulence, as we get more volatility, as we get more multiple compression, and as the forward CAGRs that I project with using cash flow margins and expected growth and runway and all those wonderful things gets more compelling. I just kind of I accumulate and I do so pretty slowly and pretty frequently. So that's been what I have been doing over the past week. I don't really add on days like this. I like I said, kind of invest in these unproven disruptors and these speculative assets. And when we have ARCs ETFs, which are a somewhat close proxy to what I invest in, up 5% in a day in an extremely volatile market like this, I'm not accumulating on days like this, but I'm more so accumulating on the days where ARC is down 6 or 7% in a single day, and my holdings are pretty much following suit. So just using the extremely cliche quote that we hear all the time from Warren Buffett of greedy when others fearful and fearful when others greedy. I don't really pick stocks like Warren Buffett does, but I do try to use the exact same time horizon as he does. Ideally, holistically, a lifetime, unless something goes wrong. And then the greedy when others fearful, I really embrace and lean into. So that's what I've been doing, and excited to talk more about names. Happy Friday, everyone.
Awesome. Love it. Yeah, I know we got a little bit of a hint earlier on a couple of those names that you might be talking about, so I'm excited to dig a little bit deeper into those. But last but certainly not least, we'll actually see if Gerg does come in here as well. But for the intros, I would love to throw it over to Stock Talk. I know you've been busy with something that's about to be launching after the markets close. Maybe a quick little bit on that if you do want, but I would love to hear how your week was in the market. Anything that stood out to you?
Yeah, man. Tough week in the market, I think, for most people, especially if you were exposed long. We got that sort of dead cat bounce on Friday after the Fed, and it kind of, I would say, changed sentiment a little bit, especially with retail. People felt like we were set up for a rally coming out of that, and obviously that didn't happen going into Thursday and going into today as well. But I still think that with no Fed meetings until January, there's a decent chance at least that we get some rally especially in the small and mid cap names that have been so brutally beaten down for the last, depending on what sectors you're looking at, the last 5 to 7 months even. A lot of these names are down 60, 70%, some 80% from the highs. So there's definitely opportunities out there. Granted, even the best opportunities in the market can be oversold indiscriminately if there's a dump in the indices. And, having that philosophy of thinking a stock can't go lower is never a good philosophy. I used to think that way when I started trading, and it bit me in the ass quite a few times. And, I lost a lot of money thinking that way in my early days of trading. And so I don't think that way anymore. I try to defer to the trend and defer to the sentiment. And, no matter how good a company is, it can continue to sell off. We've seen, really good, solid companies like Upstart and others that have shown phenomenal growth this year kind of be thrown out, thrown out the baby with the bathwater sort of effect. And we've seen that with SPACs as well and de-SPACs as well, just kind of this broad, indiscriminate selling that catches all of these names. And so in this kind of climate, I like to be a trend and theme trader. That's been tough this week as well, because the pockets of activity we've had have been kind of random and sporadic and news based and just kind of based on where people can put their money and get an immediate return, which initially in most markets, people don't need to think that way because they can get into, technically or fundamentally sound names and reap the benefits of that. But in this kind of market, it doesn't work that way. And, as these themes become less and less broad, covering less and less names, it makes me more hesitant to trade that way. And so, I'm kind of shifting from, like I said, I'm, conventionally a swing trader and an investor. I mean, that's where I've made most of my returns off, you know, 3 to 8 month swing trades or investments. Like those have been my biggest, like Tesla has been my, biggest winner ever in my portfolio. And that's just purely an investment. I've held it since 2016. So, I want to trade and think that way from a longer term perspective. I just know that this market isn't the climate for that. And so I try to adjust my strategy. Like I said, I've adjusted it to being a day trader over the course of the last few months. And then more recently, I've kind of adjusted it to being a momentum trader because, even those day trade opportunities, the way I look for them is try to find volume inflows into a sector. So, I've discussed this before, but I'll be looking at the 1 week, 1 month, 3 month, and 6 month time frames and looking at volume for a basket of names and trying to assess if there's a volume inflow into the sector overall or a volume outflow. And that really helps me identify themes and trends that are tradable. And then, I pick 2 or 3 high conviction names within the theme and trade them until I see outflows on those same time frames, right? So the 1 week, 1 month, 3 month, 6 month time frame. If I see outflows the same way I saw inflows to get into the trade, that usually is a signal to me to get out. But like I said, those themes and trends have not been working very well over the last few weeks. And so what has been working, at least for me, is to just look for, if I'm playing the downside, I'm looking for stocks that forfeit, key historical supports, because compared to other downside action, those ones tend to have more steep downside action. The puts pay better. So I'm looking for broken charts that have been broken down on key historical supports to play the downside. And then to play the upside, I'm looking for momentum runners that already have the volume, are already gauging a capacity of a move, and I can get in, play those for a quick 5 to 30% and, get in and out fast, taking base hits. So yeah, I've kind of shifted from swing trader and investor to day trader, and now to momentum trader. And I'll keep shifting the way that I'm trading to fit the market. I'm not going to fool myself to think that just because I want it to, that the market's going to start facilitating swing trading and investing. In the short term, I have no idea if it will or won't. If it does, and the indexes pick up steam and start rallying to new all-time highs and are in a definitive uptrend, maybe I'll get back into some swing trading. But if they don't and they continue this chop, then I'll kind of be swapping between that day trade theme trading hat and then my momentum trading hat, which is what I've really been focused on in the last 2 weeks. So just trying to keep my strategy adapting. It's definitely tough and stressful to keep shifting the way that I trade on my trading account. In terms of my long-term account, it has not been doing very well over the last few weeks. My long-term account has definitely been getting beaten down over the last few weeks. A lot of the names that I own have been caught up in that indiscriminate selling I was talking about. And it's tough to see, and it's hard sometimes because you're tempted to buy and add to some of these names, but you also know that the charts are broken down and that they can trade lower. So it's a tough proposition sometimes. But just trying to keep, focused and stay disciplined on my investing account. Because I've never changed the way that I operate my investing account. My investing account has always been about dollar cost averaging into high conviction names and holding them for the long term. And so again, I view that account way differently than I view my technical account. So just continuing to do that and trying to adapt to the market. And again, if we do, like I said, if we do get a definitive trend, whether it's up or down in the indexes, then I'll be playing that trend whenever it does emerge. But I don't see one yet. So for now, being nimble and just moving back and forth. With regard to Stock Talk Insiders, which we're going to launch in about an hour and 20 minutes here. Well, getting closer to just about an hour and 15 minutes. But that it's a community I'm building. I wanted to do it for free initially, but I realized that if I did that, then most likely most of my 120,000 followers would sign up, and then it would be the same thing as Twitter. And so I wanted to keep it more exclusive. I wanted to keep it tighter knit, have a smaller, more intimate community. And so we're charging $20 a month, which to some people I can understand that might be expensive, and you may not be able to afford that. If you can't afford it, don't sign up. No pressure. My Twitter and will be the exact same. I'll keep tweeting information, keep tweeting analysis, keep tweeting stock picks on my Twitter for free. This is really just, Stock Talk Insiders is going to be for people who want a more intimate experience, who want more of my time, who want, a certain level of mentoring, live Q&A. We're going to have seminars on there. My first seminar is going to be on how to sympathy trade and how to build a master watch list. So that's a strategy I've used for years. And so we're going to do a seminar on that, and hopefully that'll be educational. But we'll be doing bi-weekly seminars on there, lots of education, resources, and links. I see TSDR in the crowd. He's been posting a lot of great educational material in there. And I have a bunch of other great traders that I respect that I've brought in as contributors. I just brought in Brad today as well. He'll be in there every once in a while. I know you don't use Discord a lot, Brad, but would love to see you on there. We have P. Doom, who a lot of you may remember from the OG Twitter space. He's one of the best technical analysts I've ever met. He mentored me a lot in my early days of trading. He's no longer on Twitter, but he will be there exclusively in our Stock Talk Insiders Discord as well. So that'll be fun to get the TA edge from him. He's a great educator and just a great trader. And we have pretty much all the best traders you can think of on Twitter in there as contributors. I've tried to get a pool of really, really knowledgeable people. So hopefully it'll be a hub for education and community, and really excited about it. So, for those of you who have reserved a spot, or for those of you who have signed up, appreciate you guys, and we'll be looking forward to interacting with you there. But thanks for letting me talk about that for a bit, Evan.
Awesome, no problem, and we'll probably come back to it a little bit later on, maybe a little bit in the wrap-ups, a little bit more. I'll definitely be in the Discord, looking to maybe bring some cool news features, some cool news aspects to it. We'll I know you got some feeds going in there, but we'll maybe try and innovate and do some cool stuff on that. So excited to do it. But actually, I'm going to keep it with you, Stock Talk, for this quick question. I know the Fed, and I've heard you speak about it a little bit, and I kind of know where you're going to go with it. But I would just love to get your kind of quick thoughts on the Fed meeting and Jerome Powell this week, as it was such a big topic of the week.
Yeah, I think, most of what we saw in the Fed this week was expected. People, I think, coming into the November meeting, the expectation was tapering would be announced, and it was. And then coming into this meeting, the expectation was that we're going to see probably an announce of between 3 to 5 rate hikes. We saw a 90% chance now of at least 3 rate hikes next year. But Powell did a really excellent job. Although a lot of people might not be fans of Powell, I'm actually a big fan of his. I think he does a great job of managing rhetoric and the way that he speaks about these issues to not create mass panic. I think he does an excellent job of that. So, he kind of just said, look, we're going to be patient. We're going to, intend to taper. They doubled the rate of the tapering to 30 billion a month, which I thought was good. I didn't think it was excessive. If they'd gone to 45 billion a month, I might have been more concerned, but 30, I don't think is excessive. The policy conversation we're having right now is, for those who pay attention to macroeconomics and pay attention to policy, the dichotomy we're in between right now is this concern about inflation on one side, right? With the CPI numbers still running relatively hot. I mean, we still have above 6%. And then, on the other side, we're looking at this fear of interest rates, right? So there's a couple things that people need to understand. Even when interest rates go up, there's still going to be, comparatively to interest rates before COVID, very, very low. And so the absolute interest rate isn't going to be that high, which is very important to understand. But also what's important to understand is the market will react to the escalation of interest rates, right? Because the rising time value of money is always going to cause some compression in multiples. But, we've seen in the past, and I've said this before, typically the reaction is more steep during the tapering event, because the expectation by the market and the general public is that, as tapering comes to a close, we walk right into the interest rate hikes, which is what happens. And so that expectation that the interest rate hikes are coming generally creates that steep selling pressure during the tapering event. And then once the interest rates actually get hiked, you might see a shock or a panic sell reaction for 1 to maybe 5 days after, but then you kind of get this relief rally where people are like, all right, we've known about this for months, right? And so I like the forecasting that the Fed is doing. I like that they're being transparent about their intention to taper and raise rates next year. And, I think the economy needs it. The economy is picking up steam. We have inflationary pressures. I think it's healthy for the economy to get these rate hikes, and I think it's healthy for the economy to accelerate tapering, because it's going to give the Fed a leash to, get involved again if they need to. If economic growth slows steeply going into 23 and 24, which there is a good chance that it will. We're coming out of COVID with this massive influx of demand, fractured supply chains. As the supply chains get repaired, then more and more demand gets met. Economic growth will inevitably slow once you're coming out of this bottleneck. And depending on how much it does slow going into 2023 and 2024, that's really going to dictate if the Fed is going to, put the punch bowl back on the table to a degree. And doing this now, tapering and intending to raise interest rates now, I think is a great decision because it gives them that flexibility. Once again, it gives them that ability to get involved if they need to. And I'm not saying they will, but if they need to. And so this is just cyclical. This is the way it works. This is the way it works anytime the Fed gets involved, in previous recessions as well. This is the way that it works. So people need to understand, don't be scared of interest rates. Interest rates in and of themselves aren't bad. They're actually healthy for the economy from a deflationary perspective. And, understand that if you want the Fed to have leash to get involved again in the future, they have to and be involved in this process. So I actually like the direction we're headed in terms of policy. I understand that it's going to cause some shock in the markets, but as a person who cares more about the general health of the economy, because that's more important for the longevity of the health of the stock market, I like it and I'm fine with it. And I think it's necessary to do going into next year. So yeah, I didn't have many problems with the Fed meeting this week. I like Powell's rhetoric and I like their game plan, at least for now. We'll see if anything changes next year.
I agree, dude. I know Jerome Powell either has a lot of critics or people that love him for what's been happening. But I do think that my favorite thing about him is definitely how he presents everything that's happening and how there's really no shocks with it. Every single meeting, it's just kind of what he told us is going to happen at the last meeting. So it's definitely nice and consistency. But I'm going to keep it moving. Brad, I would love to throw it to you. I'm actually not sure how much you follow the Fed or if you have any real thoughts there. I would love to maybe get that, but also move into your thoughts on some of the stocks we were talking about earlier. I believe it was Curiosity Stream is one of the you had a little bit of a deeper thoughts on, right?
Yeah, for sure. I do pay attention to macro. I'm mainly micro focused, but it's not 100% micro. It's just close to 100% micro. So thoughts on the Federal Reserve and things that I kind of covered a few hours ago. So I'll cover super quickly reasons why I don't think runaway inflation is coming and why I'm not extremely concerned about a taper tantrum, but I'll go with those one by one. First of all, year-over-year inflation comp readings are extremely off right now. We're comparing inflation readings from an economy that's essentially normalized and essentially opened back up, with the exception of a few areas, versus an economy that was shut down and where economic activity was halted. The example I gave a few hours ago was people getting maybe extremely excited about Zoom growing 400% year over year in the pandemic, or Royal Caribbean shrinking 50% year over year in the pandemic. We have to think about what we're comping, what the year over year comp is considering, what 2 periods, what the macro environment looked like in either of those periods. And they really couldn't have been more different with this CPI and PPI reading. So really, I think the main reason why I think inflation will start to work its way back down to that 2% benchmark target is because the year over year comps will start to become more apples to apples as we enter 2022, because we'll be comping versus an economy that's hopefully still speeding up, but doing so at a more normal level because pent up demand has hopefully or not hopefully has maybe theoretically been worked off at that point. The other thing that I talked about is that global supply chains don't really have any experience with exiting a global pandemic. So our global supply chains don't know how to combat the reality of demand halting and then coming back extremely abruptly with the proliferation of vaccines. So we're going to overshoot, we're going to undershoot. The demand can recover extremely quickly. So the demand can lead to that upward pressure on inflation while scarcity lasts in the short term and temporarily while these supply chains work their way back towards normalization, which takes longer than a consumer with money in their bank account already saying, oh, I'm ready to go buy a shirt or I'm ready to go buy a pair of shoes. It just takes some more time. And I think, and I know that through this painful process of trial and error that we're currently going through, that scarcity will wane and the demand should hopefully still be there. which is really the part for economic growth we're looking at. But that would also, while the demand is still there, that would also have the effect of waning the currently high inflation we have right now. The other things that I talked about are demand for global bonds and how all those transactions are dollar denominated, and how our yields versus other developed nations are simply more compelling, and that sucks dollars out of the economy. And then the technology shock that was COVID-19, and that does seem to be somewhat sticky and somewhat sustainable, is extremely deflationary and extremely productivity and efficiency boosting, which again works against inflation. So I'm not saying it's going to go back down to 2% at the next Fed meeting, but I am saying I think the concern is peaking right now, and that it will continue to wane as metrics come out that kind of support, I think, what I'm saying. And if I'm wrong, as a long-term investor, as a long-term stock picker, my goal is to find the most differentiated companies. My goal is to find the best products and the best prospects. And that differentiation that I'm seeking out inherently comes with pricing power that I can't get from just sitting on cash, or that I can't get from some of these other assets. So in an inflationary environment, this coveted pricing power really works to combat that unit input cost inflation that weighs on profit margins. So I don't think it's going to last, but if it does last, that really won't abruptly change anything I'm doing. I also really appreciated Jerome Powell explicitly saying he pays close attention to how markets react to tapering and balance sheet movements, and just kind of giving us a wink, wink, nudge, nudge. We will not have another taper tantrum if he has anything to say about it. So that was all encouraging. The price movements were absolutely wild. The market price movements in ARK and in IWM and in all these ETFs that I track was ridiculous, but I try to kind of pay attention to the long-term implications and not the short-term price reaction that really is more so a product of expectations and sentiment going into the event. But moving on to CuriosityStream, I spend a lot of time saying nice things about my companies and why I think they're good investments. And so when something happens that's not so great, I like to also talk about that and be as open and candid as possible. So CuriosityStream yesterday afternoon, it was yesterday afternoon, published a press release that I think they thought was really good news, that they had signed on 3 million additional total subscribers via global bundling agreements across China and Latin America and Europe, and that they'd gotten to 23 million subscribers. The thing is, this fourth quarter is supposed to be, it is by far their most aggressive period for marketing, and so it should be by far their most aggressive or period for net demand additions, and it wasn't. We've gotten a 4 million net subscriber add in a previous quarter, and now we're at 3 million for this quarter. That also coincides with their original SPAC presentation guidance being far above that 23 million mark that we're currently at right now, which is disappointing. But at the same time, what's interesting about this is that their original revenue guidance that they put forward for 2021, the 71 million, has been maintained and reiterated throughout this entire process. And they started lagging behind their overall subscriber count guidance starting at the very beginning of 2020. And they've been able to reiterate this guidance all throughout the process. And that's really a product of a few things: of direct subscriber growth, which is higher value, being very strong and above expectations, but also this reality that they're leaning on content sales a little more heavily than I'd like them to kind of meet this $71 million guidance. And those content sales receive a licensing fee upfront, or it shouldn't even be called a licensing fee. It receives an upfront fee, and that's it. So you recognize a lot of revenue at that one point, but there's no longevity, there's no recurring nature to that revenue generation that would be coming with more subscribers that I want them to have. So for that reason, I reached out to IR to kind of see what the heck is going on, and they said, basically confirmed what I was what I was seeing from the numbers, that they're leaning on content sales more, and that's having a larger contribution to the guidance, which is fine, I guess, but it's lower quality revenue in my point of view, and for that reason, I'm putting a pause on adding to any CuriosityStream shares going forward until I see this 2022 guidance that they're going to put forward. That I'm looking for, at least for people who are familiar with the stock, at least 120 million, which is slightly below analyst estimates, with an improving gross margin outlook. Those are the two really KPIs that I'm looking for to give me the green light to start adding to my stake again. But I'm becoming less confident that they're going to be able to deliver that strong 2022 guidance that I'm really looking for and hoping for. So it's a bummer because I mean it's a $250 million enterprise value. They're going to do 71 million in sales and 40 million in gross profit this year, and hopefully start breaking even in terms of EBITDA next year. So it's really and they're doing well over 50% top line growth. So it's really priced reasonably for the performance that it's supposed to be putting forth and that it has put forth thus far. But that pricing is starting to also make me think, what do people with a lot better access to information than I have know that I don't? And it's really the combination of that and just the revenue mix becoming a little lower quality is putting me in this position where I'm not comfortable adding into the share price pain that we're currently seeing. I have been up until very recently, but I'm not going to going forward until I get those two benchmarks and those metrics that I'm looking for to be cleared. But I'm not selling any shares. I just want to make that loud and clear. I haven't sold a single share in my stake. I don't really use a one strike approach. I try to exercise more patience when companies are underperforming, which I now think CuriosityStream is starting to show signs of doing. It's kind of what I call a hot seat, the term I borrowed from every other sport, or every sport in the world, that I'm just paying more close attention, not paying more close attention. I always pay very close attention to the company, but I'm not approaching the share price pullback with an idea and an opinion and an enthusiasm to accumulate like I am in some of these other positions that I'm talking about constantly on Twitter and on my Substack. So a little bit disappointing for CuriosityStream. I'm not ready to call it a loser yet, but I think that outcome is a little more likely than I thought it was just a few weeks ago. For those of you who listen to me a lot, this isn't like a butterfly event where top line guidance was lowered by 29% and the reasoning was extremely contradictory. It's not that bad. It's somewhere in the middle between green skies and that event. So I just am taking a cautious approach and waiting for more information to come out to start to lean back into this position.
Yeah, Brad, I think they reduced guidance by 50% for next year. Why? So I like the company, but as an investor, I would never invest, right? So these guys are preying upon people not canceling subscription. So the main pitch they offer to new people is you sign up for $1 a month for the first year, then we double triple it the next year. So the main focus for them is the people not canceling. That's their main goal. That's what the pitch is for investors, right?
I think
right
I'd
now
say
it's the cheapest platform. That's why people come here, right? When they go and raise the price next year, I didn't see the people coming back. Like even on YouTube, like these guys are spending so much capital running ads, and the main pitch is subscribe for less than $1 a month. That's the main pitch for the first year. After that, it goes to the same prices, like $60-$70 a year, right? That's the cheapest level of Netflix. So why would you use this instead of Netflix? For the first year, it's dirt cheap. That makes sense. But after that, what happens?
So they're not really competing with Netflix in terms of a direct.
Yeah, I mean they also had the partnership with Nebula. So Nebula is a YouTube alternative, and when you sign up for that, you get this for free. So even with that, they're losing almost 50%. So with that, how much are they making per user? 50 cents a month. So not scalable, I think.
I think they've already proven that it is scalable just based on the fact that their gross margin is sitting around 50%, and the reason that they're cash flow negative is because of how much money they're pouring into content costs. And the other two things I would mention is their churn. Their user churn was better than any other.
It's so cheap, right? $1 a month. It's like, why would you cancel? But when you double or triple that next year, won't you leave? Like,
yeah. But also, Greg, you have to kind of take into consideration this isn't a brand new platform. Like I assume we're seeing kind of the similar YouTube videos with these ads at the front. And I think
for this, right? So this is usually documentaries. I think a bit longer videos, an hour on average.
Yeah. So what I would say is that, and then also the fact that their content costs. We're comparing them to Netflix a little bit. Their content costs are about 5% of Netflix's content costs. So they can afford their pricing power on their guidance is not. I'm not seeing the quadrupling price after year one. It goes from $14.99 to $19.99.
No, I think it's the premium goes $70, right? It's $69.99.
Oh, you're talking about HD, but
yeah,
but in terms of 4K, yeah, in terms of 4K, which is where most of their subscribers
Yeah.
are on the annual plan. Yeah, they're not quadrupling, but they also, I mean, they have room to bundle and to charge these dirt cheap prices because their content costs are so low, and so because they can profitably bundle with somebody like Tata Sky in India or somebody like Spiegel in Germany at fractions of a dollar for a subscription and still generate that really compelling gross margin, where we're seeing other streaming platforms like a Fubo having to kind of generate their growth while sporting a 7 or 8% gross margin. This isn't really doing so because those content costs per title are so compelling, and because the churn is so great. And you're definitely right. The churn does definitely get helped by the fact that it's so cheap. But I think that's part of the value proposition. You don't need to feel like you're getting your money's worth by having to watch it every night. You can be in the mood for a documentary once a month, and feel pretty good about paying $1 or $2 on that 4K plan.
Right. I think that's some good talk about that. Like I said, I kind of have been aware of this company for a little bit, and I've used the service in the back end, and I did enjoy when I did use it. So that doesn't mean it's a good company whatsoever, but
But yeah,
it's definitely
as
something
a
I've been interested in.
consumer, it's pretty good. As an investor, it might not be right.
Yeah, there's a bunch of stuff that falls into that lane, and for anyone,
Especially, I think
I'm
Uber,
really
right?
proud of Ryan and like his decision, and he kind of gave
Yeah,
a good clip
Twitter too,
there on why
right?
he's kind of double
Twitter,
guessing it too.
Uber. Like you would want to like use the platform with the app, but you don't want to invest in those stocks, right? So I think that falls with
Well,
the
I think Twitter, but it is one that I still do have faith in for the long term from a business, and I think there's a lot of untapped potential there. But that's besides the point, Gerg. I'm going to come to you anyway. I would love to kind of get a little bit of an intro into how your week was the market, anything that stood out, how your week was in the market, not to the market, anything that stood out at the front, or any moves or anything you're watching.
Yeah, I think my week was the same as my entire month. Like I'm almost adding nothing to my long-term position. I'm just day trading. I'm just watching people getting correct, getting mad. Like if you're making short-term bets, playing any side, you will lose because I expect volatility to be higher, right? Like if you bought calls, yes, let's say yesterday, you would be out. If you bought puts some, let's say you lose money, right? So that's why I'm not adding anything till January or until the market picks a traction. This makes no sense to me. And also expect the selling to further out because of tax lock harvesting, I think. And I do expect Christmas rally after 25th, but I have still no plans to buy anything long term till January. So I'm just on the sidelines watching people wreck their accounts.
Gerg, I remember you saying, and I genuinely do not know the answer to this. So if it has happened or not, I remember a couple weeks ago or a couple months ago, you said something that you didn't think the market was going to pull back like 5% until the end of the year or
Yeah, it
whatever it was.
hasn't so
And
far.
obviously, there's certain growth stocks and everything that have gotten slammed, but the indexes have held up pretty good. Do we know if that's broken? I don't know if
Nope.
they've had
The
a
lowest
5%
it
plus
went was
drawdown.
3.2%. And the bet was SPY won't go down more than 5%. So far I've been correct.
Yeah, if it goes down 5%, he has to do a naked lap.
Where's the naked lap around Toronto?
No,
Around
I
all
won't
of
do a
Canada.
naked. I won't do a naked lap, but there was just a naked call. So how about that?
As long as you get it served for some good Twitter content.
Yep.
But Gerg,
No, I
I'll
think
come back
me
to you and
losing
get
money will be a better content. I think.
Gerg. I'd love to see your reaction to you losing money. Are you the type of person that kind of just like whatever, or
Yeah,
do you
whatever.
have
Like I
that
can make
moment
them
of
back, right? Like I don't give a damn about my losses. I was like, oh, what went wrong? Okay, I won't do this next time. Let's go, move on. Like I'm not that kind of person. Who, oh yeah, oh I did this wrong. Let's do this. Oh I'm sorry, I can't do this. I couldn't do blah blah blah. Like if I have a bad trade, I'm just move on. Next one. Like I wouldn't give two
100%?
damns about that. Just see what went wrong and make sure you don't do that again, right? You learn from mistakes, I think. And if you don't learn
If
from
anyone
them, that's
watches
on
Ted
you, right?
Lasso,
So, but if you
yeah, dude,
improve
you got to
it,
learn
yeah,
from your L's, and that's really all you got to take away from them. If anyone watches Ted Lasso in here, traders and
times.
whatever, and
But I
investors
will.
got to be the goldfish. You got to learn the lesson and forget about it and move on. But Greg, I'll come back to you in a little bit. We'll get everyone back involved. I do see we have Juicy up here. I want to make sure everyone gets the chance to speak. Juicy, how was your week in the market? Any specific or yeah, how you doing?
Hey man, sorry, it wouldn't let me unmute. But yeah, overall in the market, I've pretty much got rid of all my swing trades. I'm not really swinging, not looking to swing next week neither. I've been day trading and it's been pretty much phenomenal. I implement the same method, same strategy. So every day I come in and pretty much do the same thing, right? If my setups are there, I'll trade them. If they're not there, I'm not really going to trade. So I've been pretty active this week in and out. Today was pretty much AMC, Visa, Netflix. A couple members in the chat have Roblox. A couple scalps on Amazon. So it's been a pretty, decent week. But honestly, I can see the frustration if you're more of a longer term trader. So my advice here is just, take a step back, man. You don't have to be in the market all the time. That's what really separates professionals from amateurs, right? The ability to have that discipline and say, hey, this isn't my market. I was on the spaces with Jake from TrendSpider. He was like, there's a big chance I'm pretty much done trading for the rest of the year, right? Because he's looking at the market saying, hey, this market it could go either way. So I don't want to risk that, right? So for me to you, figure out your style, figure out your strategy, and just stick to doing what works best for you, right? And if you take any losses in this market, one, just drop your position size and do it with Gerv said, log your trades, go back, see what went wrong, and don't do that again and try something new the next day. But all in all, very good week in the market for me and the team.
Yeah, I'll give you that, right? Some people I know, they have to do 3, 4, 5 trades a day. Until they don't do that, they don't stop, right? And some people like to be fully invested at all times. They don't like to have cash. Don't do that, right? Wait for a good trade. Like
You
for
know,
me, even if I don't trade it for a week, I don't really care, right? If I don't find a good setup, I won't take that. Like in this month, I have taken only 4 trades so far, 2 a week so far. But in November, I did like 30, 40. October, again, 20, 30. But this, only 4 this month so far. If I don't find a good setup, I won't take that. Like, I don't force trades.
no, and just to chime on to that, like my biggest weeks, like my biggest, largest weeks were weeks where I barely took any trades, right? And the craziest thing is when you overtrade, the problem is you get in and out of a trade, then you're cash and you take a loss. You're not just going to sit there, right? So you're going to hop from position to position to position. I find it better for me just to hold on to a position that's working in my favor, maybe trade that with less. But the fact of the matter is, once you go cash after you take a loss, you should be looking to walk away, especially in a choppy market. Like I'm on audio on my team at 11:30, like calling people out name by name, telling them to go to work, go home, go do something else, but look at the market. And that's the biggest downfall for most traders. They sit behind the screen, and it's like the closer you get to 12, the more you lean forward, the more your eyes open up, then you get into this notions where you have to push a button, and it's really not like that. Like true trading, like people who do this for a living, there's a lot of bullshit on social media, right? You don't hear people on social media saying, like successful traders saying, hey, I'm a day trader, I went 30 for 30 today. You don't hear that. You hear people saying, hey, I
But
went three
yeah,
for
those
five,
numbers are impossible. If someone is saying that, they win
30 for 30
100%. Yeah.
losses.
30 for
Yeah,
30, right? It's more like
30 for
two
30
for five,
losses is
2 for 4.
possible. But those numbers at the longer period of time is almost impossible. Even the best hedge fund, the Renaissance guys, they win 50.01, 50.02, so you can't win them all.
I just want to throw something out there. I think, Gerg, we kind of talked about this a little bit. Kathy Wood and Ark Invest. So, they do love to get a lot of hate online because, they post every single trade that they make and every single move that they make, and truthfully, every single mistake that they make. So it's really interesting. And obviously, when you see a bunch of mistakes, I think Jim Cramer falls into the same problem too, making too many big, public, bold claims when not every single one is going to work and you're going to get slammed for those ones that don't. But I know it's a
Yeah,
double-edged
so the
sword with
thing
all.
that happens, right? Your good calls, the people who only took that will complain. The bad ones, everyone will complain. So, and usually the good ones, they don't get the same attention, right? Like I said, oh, Jim Cramer going to buy Apple a year back at 30%. But would I commend that, or would I say, oh, he told me to buy Zoom, it's on 50%. So, like, which one would you go with? The Zoom one, right? Even if you're right there, that's a better headline. Even if you do that, you will get more likes on the Zoom post and him making a bad call than him making a good one, right? So it's what the people like.
Yo,
That is so true.
are we just having
Go
free
ahead.
conversation, or are we structuring this right now? Because I gotta
No, no,
connect.
no
Oh,
free, no free conversations, please.
all right. Here's a
Yeah,
question.
you can go on. I'm staying with
$29.99.
you. Yeah, go on.
Here's
They're
a question for the
$29.99.
panel. All right,
No, I'm
who
kidding. Go ahead.
do you guys feel that Furus, gurus, people of that nature are a benefit or a non-benefit for new traders on Twitter?
No, Twitter.
Just in general, are Furus and gurus a good thing
I
for a new
think
trader to be
Twitter
around or
is
no?
the best and the worst platform to learn trading or to get trades from. You have the best of the best and the worst of the worst. You just need to scan through them, I think.
Yeah, it's like there's a Google and there's a Google Scholar, but there's not a Twitter and a Twitter Scholar, which might skew it to a more like net positive. But I don't have strong opinion either way. Just putting
Yeah,
that out there.
you know, Twitter, on Twitter, I usually find the best and the worst DD too.
So
I think there is
And the funny thing is, the
the
worst
kind of.
DD tends to get the most likes. That's
Sorry,
one thing
Greg.
I've
I'm having
seen.
a little troubles here and at times, so I'm on two phones listening in. If I cut anyone off, but I do agree that Furus really are a problem. There's a community of people on Twitter who really all their entire play is or whatever is getting right big on one or two trades, garnering a lot of large following, and then kind of playing around in penny stocks. So there's people who like Greg, like you said, it's really like a dichotomy. There's the best of the best on here, and there's the worst of the worst. And the worst of the worst, if you're good at social media and good at playing this game, you're gonna get a lot of views. It's I think it's a bad thing.
So I want to chime in here, guys, and this is going to piss a lot of people off, right? Because a lot of people that are listening here are looking up to certain people. One thing that really bothers me as a leader in the industry is when people are posting. You go and listen. When I start saying tickers, you're gonna know who I'm talking about. They'll post 3 or 4 tickers, and the next day they'll say 700% on Apple, 900% on Tesla, 600% on J&J, and then the next thing you know, you look at them, and they're like, "Yeah, well, technically." The time of the trigger to the top of the start of this chart is the percentage I calculated on. But how much did you make taking the trade? Did you even get in the trade, right? So for a new person coming around and they're seeing this shit and they're like, dude, I can make 700%. Look, I'm gonna give a real life example. There's a collection of Furus who said they made over 300% yesterday trading J&J. I challenge you to pull up a 5-minute chart and look at J&J and tell me what somebody made 500 to 700%. It's bullshit. Right, so
Can we hear some names?
I ain't listen.
Drop the names.
I ain't
Let's
dropping
hear
no
them. Let's
names
hear
here,
them.
man.
Let's
Because
hear
listen,
them.
because what's going to happen when we drop names? It gets into a shit talking storm, and
No,
I'm not about that.
I think Frintuit needs drama. Like drama, try with Frintuit.
Nah,
So let's go.
drama. I'm not where I'm from. I'm not about that drama. Like everybody wants to honk the horn. Nobody wants to get out the car and fight. It's that simple, man. So I'm not about that whole keyboard warrior bullshit. I'm the type of person that is, if you see me in real life, it's gonna be a real problem for you. You know what I mean? But no, just to say, just my advice to anybody that's listening: do your due diligence, right? I honestly think that you should either be trading with a simulated account or trading with a very small amount of money in the beginning. If you're following a bunch of people, experiment and figure out what's going to work for you. And then this should be a long-term game. This should be like a 5-year game for you. Right? You should be legitly out here practicing, developing these skills, and then trusting what works for you and following what works for you and never system hop. Like I'm telling you, 90% of the shit you see on social media is all bullshit. 100% is all bullshit. Follow what works for you and study charts, man. Like that's what I'm saying. Like I ran all the people I followed, and I was looking at some of these percentages. I'm looking at this J&J chart, right? Unless you magically bought the bottom at 930 and sold the top at 1010, there's no way you made 700%. Now you're promoting that to your followers. That's crazy.
And Twitter's a
If you
wild
want to
place.
find that, go on Twitter, search JNG 700. Let me do that to you. Let's see who comes up.
He loves the drama.
It's more like 300, but yeah, go ahead.
Oh, he was
All
here
right.
too in Spaces. I've seen him a couple of times, right?
Listen,
Yeah,
man.
I won't say the name. I will leave it to Juicy. So yeah.
Listen, man. They don't want to get out the car, bro.
All right, I love it. I love it. I do love the good talks, and one of the biggest things that you said there that really did stick with me. Obviously, all the Furus, when you're getting fed that type of information, you're kind of doing those type of scummy things in there. It's sad to see them take off. But one thing that you said in there is that this is really a game played over years and not days, not weeks, not whatever. The stock market, both trading and investing, like long-term investing, my time horizon is 10 plus years. So like if you're in that playing for a week, 2 week, playing those type of moves, what are you even doing? But yeah, this is a game played over years for traders. Like each each day, each week might be a round or a game for you or something. But when you're looking back, if you do really good 3 years and then have one fourth year where you lose everything, well, what did you do for the last 3 years? You didn't get any money from it. So just make sure that when you are doing this, you are considering the long term effects. That even if your perspective on trades and time horizon on trades is short term, make sure you're kind of pointing your account in that direction for the long term. Think about what are my goals for 5 years, what are my goals for 10 years, everything like that. But with that, we'll kind of bring it a little bit more back to this week in the market. I would love to throw it over to Wolf if we have you up here. Earlier, you mentioned a couple of stocks that you were trading. Maybe we'll love to hear some of your thoughts on those, and then could also possibly send them around to get some crowdsourced opinions on them.
Yep. I'm continuing to look towards areas where the money is flowing into, so areas of strength. A couple of the ones that I traded this week included Walmart, AMD, NVIDIA. Those were a few where I saw, continuous flow into. I would love to trade more Tesla, but honestly, that just scares me. So I haven't really been touching it as much. In addition, I am looking going into next week at SoFi and Palantir. I'd love to see if they could find some bottoms here. There's definitely support in the areas that they're at. So maybe there's some good, leaps even that could be grabbing in those areas. And then I think also the sports betting industry, I know this is one that, we've chatted about over and over. It's still in a downtrend. I'm not going to touch it yet, but stuff like DraftKings and Penn are basically coming back, way down to those lows that you saw towards really early March of 2020. They're almost back there. I haven't really checked Penn, but I know DraftKings is pretty much there. I don't know if y'all saw the video of Portnoy talking about Penn stock being down and how he has to commercial now, like is what he said. Not my words. It's coming back down. It's like $48. So there's definitely support here if you November and August of 2020. So those are a couple interesting names. But yeah, semiconductor industry, whether that's Micron or SOXL, just stuff around that. I've seen the flow. And then sticking with the basics like Apple, been a classic. We continue to see strength. Some stuff in those pharmaceutical areas. So J&J was already mentioned, but also Moderna and Pfizer on top of that. I just don't want to be like grabbing speculative, out there pieces like, some of these things that just are really major downtrends like FCell, what was the other one? Like MQ, and maybe there's a few others I could talk about like LC, stuff like that. Like even though LC, I really do hope to find support here. It broke through the year-to-date VWAP though. Just those ones that have like severe, 3-4 week downtrends with no recourse coming back yet, I'm staying away from. And the ones that have not done that, like, NVIDIA, you can look at it and sure, it had a rough day yesterday, but it's still sitting right above its 50-day moving average. Stuff like that, that's where I'm looking towards. I really am looking the 50-day here. The ones that hold their 50-day, I've been playing the bounce right off the 50-day, and it's usually good for at least a day or two of a swing trade. And then on the downside, I think you can also play some puts. I know Stock Talk always talks about that, how he does love to play both sides. So Wave talks about if that drops under 200, get level again. I would love to smack a put on that. Avis Budget Group, that's something that just had a way bigger run up than it really should have, and now has been in a downtrend here. So I'd love to see if there was. Me and Jonah talked about some short levels on that. The PROG. I don't really know if I want to hit this one because it has so much volatility, but it's all the way back down to like under $3, and it very recently was over $6 mid-November, and it's basically breaking through all of its key levels. So there's a handful of names right there, but I have honestly, at this point, I just have multiple just lists full of names that I look at on a daily basis, tracking and charting, and we'll see where they continue to go.
You look at Facebook. Like Facebook is running right now. Very big candle right now. You can see that?
Yeah, that's a good one too. Yeah, Facebook is definitely something that's been on the list.
No, just now, in the last 10-20 seconds, it's been running. I can't find any news, but the very big candle.
It's coming down a little bit from that candle. It's coming back down.
Yeah, 335. Oh, yeah, it's back down. Okay.
Yeah.
So just now it hit 335, a new high for the day. It's back down to 334 now. Okay.
Yeah, it's spiked. But yeah, Facebook's a good one. That's another one where you definitely have money coming in. It's kind of trying to hold Facebook's an interesting one because it's actually holding the 50-day and the 200-day kind of simultaneously here is what it's attempting to do. So definitely looking at that. And then also, like we talked about Upstart and Celsius the other day on the calls, the Upstart chart does look kind of broken. We talked about this earlier. It really does have to hold this volume shelf here at 125-ish. If it breaks through this volume, which it dipped into it today, it would be very bad, very bad. Would continue to see falling lower. So for a lot of these stocks, I think a lot of the ones that I just named, they do have, plenty of solid fundamentals, but fundamentals are good for, I think, discovering stocks in this area, but then the timing of you're going to get in and out, unless you're saying, hey, this is a multi-year hold for me, I'm just going to put away and not look at it, but I know that's not me. I am looking at technicals for entry points. Another one's like another broken chart, like Upwork, up 8% today, but look at the chart over the last since October. I mean, this thing dropped from $60 to $35. So just things like this, Brian Shannon would just really point out the downtrends. That's what I'm staying away from. Like NIO, this was NIO. Another one where I was on a call earlier this week, maybe Tuesday, and I was talking with Brian Shannon, and he pointed out, listen, it's below every single key moving average. It's below its year-to-date anchored VWAP, the VWAP from the highs, and the chart's in a clear downtrend. There's no volume shelf. So I said, screw it. I'm selling my whole position. I sold the whole position and proceeded to drop like another 10% since. So although, yes, we sit there hoping stocks are going to hit a bounce back, if something doesn't, you can't just rely on hope as a strategy here. You have to actually do the due diligence. And if you're going to be a long-term investor like Brad is, right, where you're looking at this and you're really diving into fundamentals, that's a strong strategy. And he's very well equipped to do that. I am not as well equipped as Brad to, completely put my faith into some companies based off the fundamentals. So I really do try a package deal with, scanning through fundamentals for things like revenue growth and EBITDA margins and stuff like that. But then also looking at my technicals and saying, if this is below every single key moving average and below the volume shelves, why am I going to think that it bounce? I'm just not. So that's kind of the strategy.
I have one more thing to say. So yesterday, Jim Cramer started to avoid SPACs and don't buy them. So that's why today I went all in SPACs. So keep that in mind. Watch SPACs.
Bullish.
Very bullish, Wolf. This is something I would go full on max leverage on.
Kurt, you and Kramer are best friends, right?
Yep.
Yeah, I just want to say that since I met Jim Cramer in person and he told me he was bullish on the market, it's done nothing but fall.
You should meet him again. Ask him the same question. If he says bearish, we buy same day spike calls, all in, all of us. Can you do that for us, Wolf? We'll fly you out to New York just to meet him.
He'll fly me back to New York. I don't really want to leave Miami right now, to be honest.
Hey, the Wi-Fi is telling me otherwise.
Yeah, the Wi-Fi.
The Wi-Fi, yeah. I want to get some good Wi-Fi, but it's also like 80 degrees and sunny, and I'm going to walk down to the beach after this, so...
All right, wait. Let me bring it back quickly. We are going to go into head into wrap-ups for 1 second. Wolf, I would love to throw it over to you quickly, get a quick Google Calendar thing, and it's been over about an hour since we've done it. I would love to slide it in before the markets close if we could.
Would love to. Yeah, 3:59. Make your moves now or forever hold your silence. Okay, real quick on the calendar. This is something that we have over 1,600 people on Twitter using, including people who work at Twitter themselves. So listen up if you're not already on this tool. Basically, how can you find all of our spaces? Myself, Stock Market News, Stock Talk Weekly, Gergs. When our space is happening, how would you know? You have to scroll through Twitter. That is an outdated system. Instead, join the free public Google Calendar. The only and best way to get on it is to go ahead and DM either myself or Stock Market News. Hop into our DMs right now. They're both open. Drop us your Gmail or your email, whatever it is. Gmail is preferable, and we will add you onto our public Google Calendar, and you will know when all of our spaces are happening. You'll be able to see them right there on your phone. It'll be the simplest thing. You'll say, oh, here's a technical analysis space. Oh, here's an option space, a cryptocurrency space. Whatever it is, you will be able to plan out your week in advance. I love planning out my week in advance. I don't want to scramble for things last minute or have overlapping commitments. Instead, I want to be able to come get this free, awesome education. So once again, thousands of people are using this, well, soon to be thousands, over 1,000 right now, and you should be too if you're not already on it. Hop into our DMs, drop us your Gmail or email to myself or Stock Market News, and we will get you on it ASAP.
And just like that, the casino is closed. See you guys on Monday. Don't lose too much money over the weekend. Save some for Wall Street for Monday.
Green week next week.
You think so,
All right,
Talk? Let me go
Yeah,
all
I
in
think
puts.
so.
Just because you said that.
And
I
Yeah,
have
I mean,
like
maybe
2 more minutes to buy options. So all in
let
puts.
the crypto plunge begin.
I think
yeah.
crypto
I mean, if we
sells
get a
off
crypto
again,
plunge over,
and Sunday it rallies, Monday it's flat, and Tuesday it dumps again.
no, I mean, considering that crypto has not been performing as like an inflationary hedge, or the way that it is expected to perform. I mean, I
No.
think
Crypto
it's
isn't
correlated
hedged.
with.
You know what a hedge is in this market? AMC.
Yeah, maybe. I mean, especially after today. But no, I mean, really, like with the way Bitcoin and Ethereum have been performing, I think that watching them over this weekend will give a really good indicator of how we're going to be on Monday. Bitcoin being down has been pretty correlated with, speculative assets and other types of growth and tech assets. So we'll see. But I think watching Bitcoin and Ethereum this weekend will be a good way to gauge how the market's going to look going into next week. That's what I'll be watching over the weekend, especially. But yeah, I mean, just purely speculation, not making like a data-based decision, pure speculation. I'm thinking that we have a green week next week, or at least more green days than red days. Just think there's a little bit of uncertainty behind us now. No Fed meeting until November. Good spirits around Christmas, and so hopefully we'll get a little bit of buy action next year, next week, and a little bit more liquidity, a little bit more action in some of these beaten down names. But then again, we may not. So we'll see. I'll take it day by day going into next week. But yeah, Stock Talk Insiders is coming in 30 minutes. So a little self promo there. So for those of you who are in the audience that reserved a spot or want to sign up, that link will be posted in about 30 minutes here. I think I'm going to start a space as soon as we close this one, and you're all feel free to jump in there, and I'll be answering a few questions about the community and just helping onboard people. So
Yo, Stock,
appreciate you
the
guys.
people on your OnlyFans, do they get a discount?
I don't. Unfortunately, Greg, I haven't made an OnlyFans yet, like you.
Who's that then? Who am I paying?
I don't know. He must have. One of the imposter accounts must have made an OnlyFans. I don't
Bro,
know.
I got scammed.
All right, I think that though, kind of with that, let's slide into the wrap ups. I think that was a good start for it. Stock Talk, you are confirmed going live in about 27 minutes now.
Yeah, I mean, well, I'll just go live as soon as we close this out. But the link for Stock Talk Insiders will go live in about 27 minutes from now.
Perfect. So everyone be on the lookout for that. Big shout out to Stock Talk. Big shout out to all the speakers that we have up here. Make sure you are following them. They're all amazing profiles. They were really great in this spaces. This was awesome spaces, but their Twitter accounts, their Twitter feeds are even better. With that, we're going to slide into wrap-ups across the panel. I'm going to throw it over to Brad, Stock Market Nerd, first.
Yeah, nothing much more to cover. The news of the week post is going to come out tomorrow morning on the Substack as it always does. It's all free. So another shameless plug for for my product as well. Also, I'm very excited about Stock Talk Weekly's product debut. If you can't tell, he's a really smart dude. So excited to learn more about the technical side of things from him in the coming months. Other than that, Wolf, I'm going to be officially in Miami from December 29th to January 2nd because that's where Michigan's bowl game is, and I'm making it a trip. I'm so excited for this game. But if you're still there, we should take a long walk on the beach together, like it seems like you're about to do. But yeah, thanks for having me. Have a great weekend, everybody. Just to reiterate. Stopped adding to Curiosity Stream going forward, holding onto the position, not selling any, but it's kind of prove it time for them, and we'll see how they do.
Yeah, what do you want? Next week will be green. Mark my words. If you look at the last 30 or 35 quad bridgings, the week leading up to that was red, and the week after that was green. I think 74% of the time. So if you go with the odds, next week should be green.
Gerg, keep going. It's kind of the start of the wrap-ups there. Keep us into a final wrap-up for you as well.
Oh, okay.
All right, perfect. Well, make sure you're following Gurk. He posts out some cool stuff. He's a little bit of a memer out there as well. So if you like to laugh, he's a good follow as well. With that, I'm going to keep it moving, throw it over to Juicy.
What's up, guys? My advice to everybody here is, one, follow all these speakers. Two, congratulations to Stock Talk Weekly for his community. So
Is he
check him out, guys. But yeah, man, the market's range bound still. It looks like, we just closed pretty much in a range. So I would expect chop going into next week, man. So keep your trades tight. I'm actually about to start a spaces here. I'm about to interview a couple of my students live. So if you guys want to hop over after Stock Talks space, feel free. But I'm out of here. Thanks Stock Market News for doing this, and I'm out, guys. Be easy. Everybody stay green.
Love it, Juicy. Always love having you. A pleasure. I'm gonna say it again. Make sure you're following all the speakers we have up here. I don't think we have the Wolf account up here. Gav, are you able to speak right now?
It's booted all over the place. Can you hear me?
Yep, we can hear you.
Yeah, man. I don't know what's happening with that. I'm going to try to figure out some way to figure out this Wi-Fi situation. I've been chatting with a nice woman who works at Twitter Spaces and sending her, and she said they opened up a ticket on my account. So we will see what happens with that. But I'm very excited for the Wolf account to hit like 40K. I think it could happen probably latest Good Morning FinTwit. It's like less than 300 away from that. So that'll be really fun. And looking forward to the weekend because I think God is sending me a message that I need to maybe spend less time on a screen because I'm literally in Miami and I haven't even left this house in like 3 days. I don't think I've stepped outside. So maybe that's a message.
Go for that nice long walk. Hopefully you get to go and use it though.
Also, Brad, my flight is on the 30th, so we'll have very small overlap.
No worries, some other time.
All right, perfect. First of all, Brad, I'm going to take a step back. I will say good luck to you and Michigan in that bowl game. Hopefully you guys do end up doing good. But with that, we were going to move into kind of the ending here. I just want to give a big shout out one more time to all my speakers that came in here and kind of donated their time and gave you guys all some really great information. Big, huge shout out to all the listeners who came in here and spent some time with us. Hopefully you guys all have a fantastic weekend. Don't end it yet. Stock Talk's about to be going live right after this, so make sure to hop into that, and then Juicy will be live after him. So for all of you guys who are staying in or kind of hanging around on Friday, you still got a bunch of content coming from this stuff. And but with that, everyone enjoy your weekend, and we look forward to seeing you back 9:20 a.m. Eastern for Good Morning FinTwit.